What's going on, everyone? This is Rob from Robb Invest coming at you with another video. Today we are going to do a little simulation. So we're going to look at what if SPYi went through the 2022 bear market. We're going to compare how much you will get for a lump sum. We're going to compare quarterly DCA, monthly DCA, weekly DCA, and daily DCA. But before we get to the video, I am not a financial advisor. This video is for entertainment and educational purposes, so please do your own due diligence. SPYi is a covered call ETF managed by Neos Investment. It pays a dividend of 12%, which is the yield that we're going to need to keep track of to do this equation. So what Neos Investment does is own the underlying index and does out of the money cover calls, which generates that 12% dividend yield. Here are some other factors we need to consider. We need to consider a stock's beta. A stock beta is how volatile a stock is. Also, ETFs count as well. A beta range anywhere from 0 to 3. It can go higher than 3 and it can go below 0. That's called a negative beta. Now, SPYi has an average beta of 0.75, which is 25% less beta than SPY, or the S&P 500 index, which has a beta of 1. One way to reduce your portfolio volatility is through dollar cost averaging. Now, you can quarterly dollar cost average, which you are investing 4 times a year, monthly dollar cost averaging, which you are buying stocks once a month, weekly dollar cost averaging, which you are buying stocks every week. Daily dollar cost averaging is when you're buying stocks every market day. We're going to go into depth in each one of the strategies. So let's start with quarterly DCA. If you're doing quarterly DCA, your portfolio volatility will decrease by 16%. If you were doing monthly dollar cost averaging, your portfolio's volatility will decrease by 22%. If you were doing weekly DCA or dollar cost averaging, your portfolio volatility will decrease by 24%. Last but not least, if you are dollar cost averaging on a daily basis, your portfolio validity is going to decrease by 25%. So SPYi does cover call ETFs on the S&P 500. So it tracks the underlying. So this is why I have S&P at. So in the 2022 bear market, over that year, it dropped 19.5%. And this is the capital loss. So for SPYi, what we're going to do, we're going to take 19 times 0.75. That's going to give us a loss of 14.25%. So how did I get that? What I did was I took the beta, that's where the 0.75 came from, and then I times that by the underlying drop, so which is 19%. So 19% times 0.75 is 14.25%. So you will have a capital loss of SPY of 14.25%. This is if you did not reinvest in your dividends. Now, if you reinvest in your dividends, that's going to make the number a whole lot more different. So, if you take 14.75 and you reinvest all your dividends, which is 12%, you're going to get a negative 2.25% return. And this is off a lump sum. Now, if we do quarterly, it's going to be different. It's going to drop significantly. So if you DCA on a quarterly basis, reinvesting your dividends, you will see a drop of negative 1.89%. On a monthly DCA, you're going to see a drop of 1.80%, negative 1.80%. Weekly, you're going to see a drop of negative 1.71. And daily dollar cost averaging, you're going to see a drop of negative 1.68% return. Alright guys, that wraps up the video. And just remember guys, this is a what if scenario. We don't have enough data on this because SPYi came out in late 2022, so that's when the bear market was recovering. So the way I got these numbers, I looked them up, like the beta. I looked that up in the internet, and as far as like the validity percentages, I also looked that up as well. So basically, I just put those numbers together, and I came up with the percentages and so forth. Now, these numbers could be off. I mean, I could be very accurate, but we don't know because we have not experienced a bear market or even a recession. If you found this video helpful and informative, please like, share, and subscribe. If you are an owner of SPYi, put it in the comment section. If you have any questions about what I just went over in the video, you can also put that in the comment section. All right, guys, I will see you in the next video.